Good morning, good evening, and good luck, because in the world of global finance today, you're gonna need it. Welcome to Financial Funnies Daily News, the only show where we mix markets with memes, dollars with drama, and break down the madness of microeconomics with a shot of espresso and a sprinkle of sarcasm without the running commentary. So today we're talking economic blackouts, crypto conspiracies, tariff tantrums, ripple revolutions, and yes, even a gold rush without anyone selling gold. From Baghdad to Beijing, from Bitcoin to Basel III, it's a roller coaster of policies, panic, and profit opportunities, and we're riding it with no seatbelt, baby. So buckle up, sip something strong, and remember, in this show, we don't just follow the money, we follow the madness. Cancel your Amazon carts and hide your credit cards. We've got good old-fashioned economic blackouts incoming. That's right, the People's Union USA is asking everyone to spend absolutely nothing on August the 9th, 2025. Zero, zilch, nada, no Starbucks, no impulsive buys, not even a cheeky burrito run. Why? Because big corporations apparently ghosted their DEI pledges and people are mad. John Schwartz, our digital era Robin Hood with 500,000 Instagram followers, says it's time for a spending strike. Will this bring Wall Street to its knees? Probably not, but hey, corporate PR teams might break a sweat. Retail and consumer discretionary sectors may shrug off the one-day event financially, but persistent cultural pressure could lead to long-term brand risk and consumer activism. One day of no spending won't crash the system, but it sure gives your wallet a break and makes a great Instagram story. This is the fiscal version of dry January. Moving on, Iraqi Bankageddon. In Iraq, 35 out of 72 banks just got hit with US sanctions. That's nearly half of the financial system. Dollar transactions blocked. International trust sinking. Oh, and the tip came from a disgruntled insider. If Baghdad banking was a Netflix show, it would be the season finale. The outlook: severe restrictions of USD flows will drive Iraq towards alternative currencies like acceleration, non-dollar settlements in oil and trade. Looks like Iraq just got ghosted by the greenback. De-dollarization isn't just a BRICS fantasy anymore, it's a survival mechanism. Next up, Iraq's final warning, PMF versus the system. Iraq's top cleric has issued a final warning to the government: disarm the PMF or enjoy full-blown system collapse. It's basically put the guns down or the economy goes boom. Honestly, it's like a Game of Thrones with oil contracts. The outlook: if violence escalates, expect currency devaluation, capital flight, and rapid deterioration of investor confidence. You know, it's serious when religious leaders are talking economics. Somebody get the IMF on speed dial. Swinging to Trump tariff fests, Russia and Friends edition. Trump's back, baby, and he bought his tariff hammer. A new executive order slaps a 25% tariff on Russian imports and any country buying oil. India, that side eye was for you. It's about national security, but it feels like economic dodgeball. The outlook: short-term prices increases likely for commodities and oil-related imports. Risk of retaliatory tariffs or WTO disputes rises. When your trade policy looks like a boxing match, expect bruises, even for the spectators. Trump just hit imported semiconductors with 100% tariff. Unless you're building them in the US, good news for domestic chip makers. Bad news for gamers, car companies, and anyone who enjoys affordable tech. The outlook: tariffs could fuel domestic investment in chip manufacturing but raise tech costs in the short term. This is the economic version of if you want it done right, build it yourself. Now, Apple's dropping a juicy $600 billion to build in the US. That's a lot of iPhone factories. And let's be honest, tax breaks, it's like Make America Great Again, but with sleek packaging. Massive boost to US manufacturing and tech employment strengthens reshoring trend. When Apple builds America, it's less about patriotism and more about production pipelines and PR. Breaking into number 7 news. I'm on a roll, guys. There is loads today. Apparently, Trump wants to nationalize Washington, D.C., remove occult symbols and rebuild it like its Marvel origin story. It's like urban planning meets warfare. We're not saying he's wrong, we're saying it's weird. Zero economic impact unless infrastructure plans follow. Political theatre remains theatre for now. Sounds like the plot of a Dan Brown novel crossed with a zooming permit application. Unpacking the Fed versus housing. Powell gets blamed. The Federal Housing Director just accused Jerome Powell of hurting the housing market. Honestly, when interest rates are higher than your GPA, it's a fair critique. Rate cut expected in September. Housing may rebound if borrowing costs ease. It's not easy being the Fed chair. Everyone wants to grow with zero inflation and free mortgages. Good luck. Headlining Zeta Global surprise winner. Zeta Global just soared 22% thanks to its earnings and partnership. In this economy, that's practically a miracle. One of the few stocks not allergic to good news. The outlook: momentum traders and institutional funds likely to increase short-term exposure. Proof that sometimes the market does reward competence, just not often. The spotlight is on OpenAI hits $500 billion valuation. OpenAI is reportedly worth $500 billion now. AI investment will remain red hot. Regulatory attention likely to increase. We build machines to replace ourselves and now they're worth more than us. Progress? Maybe. Brazil's President Lula says strategic minerals are off the export list unless you're building refineries there. Smart move, yes. Socialists vibes, also yes. More resource nationalism to come. Expect supply chain shifts in rare earths and lithium. It's like bricks meets build a bear. Build it here or beat it. Moving on. The US now has strategic Bitcoin reserve. That's right. Uncle Sam is now officially a crypto whale, funded by seized coins, of course. It's crime fighting with capital gains. The outlook: signals growing government support for digital assets, possibly policy shifts towards holding crypto in reserves. The government went from ban it to bag it. Bold move, feds. Swinging to the UK, and obviously it's always bad news. Bad news from Blighty. UK construction has slowed to its worst pace since 2020. The Bank of England may cut rates, but they also cut T-breaks to build faster. The outlook: interest rate cuts expected. Real estate sectors may recover, but slowly. At this rate, the only thing being built in Britain is economic anxiety. Next up, Basel III comeback tour. The US may rejoin the Basel III club. That means more capital requirements, more compliance and more accountants with stress rashes. The outlook: bank profitability may take a hit short term, but stability will improve long term. The OECD says weak business investment could stand global growth. Translation: if companies keep sitting on cash, we're heading for a joyless, jobless future. Cheers! Lower investment, slower growth, weaker earnings outlook globally. It's hard to invest when you're spending all your money on tariffs and compliance lawyers. Despite the hype, BRICS still hasn't launched a gold-backed coin. BRICS Pay is in the works, but for now some trades are being settled in shiny metals like it's 1862. Gold-settled trade may expand with BRICS. Reserve currency ambition remains distant. It's likely trying to launch Apple Pay on a flip phone. Ambition meets bureaucracy. Countries are unpacking financial fragmentation. SWIFT? Who? Countries are ditching SWIFT faster than your teens ditched Facebook. Expect more regional payment systems and less global cohesion. Yes, yay friction. The outlook: new regional financial rails may challenge US dollar dominance in the long run. The future of finance is becoming a patchwork quilt, stitched together by blockchains and nationalism. Silver just hit a 14-year high, platinum's up, and gold took a little nap. Apparently when the world panics, it does so in precious metals. Bullish for silver and platinum. Gold expected to rebound as macro uncertainty persists. The spotlight is on Goldman Sachs says gold could hit 3,700 by year end. That's not a forecast, that's a flex. Buy gold, buy soap to clean it, and then wait. The outlook: continued central bank buying and macro volatility support upward price movement. When the people printing money start hoarding shiny rocks, it's time to pay attention. Ripple's building a bank. XRP is bridging CBDCs, and your money might soon move faster than your gossip. With 20 plus central banks on board, XRP could be the duct tape of global finance. If adopted widely, which we know is happening, XRP could provide critical liquidity for FX markets. Price action likely to follow utility. It's not just a coin, it's a spiritual movement with server nodes. Whilst Bitcoin flexes, USDC and RLUSD are quietly winning. In countries with failing fiat, stablecoins are becoming the real store of value. CBDCs, take note, this is how you do adoption. The outlook: stablecoin usage to rise globally, especially in inflation-stricken and capital-controlled markets. When your real money is less stable than your digital monopoly bucks, you've got problems. And there you have it, 22 stories, 7 continents, 3 conspiracy theories, and at least 1 gold bar later. You've been watching Financial Funnies, where the markets are unpredictable and the jokes are recession-proof. From crypto chaos to tariff meltdowns, sanctions in the sand, and Apple building America, remember, the world of economy is like a toddler with a credit card. Exciting, unstable, and prone to break down in public. So whether you're a hodler, a hedger, or just hiding from your portfolio, stay sharp, stay skeptical, and whatever you do, don't check your 401k after midnight. And head over to XRP Boys and get your latest update with Paul Brooker on more extensive crypto news. Guys, he's got a surprise for you. So I will see you tomorrow. For now, bye bye.